Hello, everyone. This is John Edmond here with the Apartment Association of California's Southern Cities, here with our longtime vendor, Matthew. Matthew, tell us a little bit about your company.
Hi, I'm Matthew Bichlmeier. I'm from Bichlmeier Insurance Services Incorporated. We're in Redondo Beach, California. We've been serving the South Bay in California for over 60 years now. My grandparents, Joyce and Jerry Bichlmeier, started the agency in the 60s. My uncles, Terry and Carrie, my dad, and my aunt Sherry ran the business. And now my dad is looking to, retire. And I've been working for the agency for about 10 years now. And so I've been chugging along there. But we do personal and commercial insurance, mostly personal, but we do also do commercial. On the commercial side, we primarily do apartment buildings and residential LROs and things like that. So we are very well versed in the turbulence of the apartment insurance market going on right now.
Well, certainly there's a lot of discussions around insurance and how insurance impacts housing providers, and there's a lot of questions that have come into it. But before we get into that, I just wanted to talk. Well, first of all, I looked through our records. Do you know that your parents, I guess, your grandparents, were one of the first housing vendors with the association? So it's been many years a member of the association. So your company certainly is a trusted partner through the association for many years. And so we appreciate your, helping our members as they've needed their coverage for their building liability and other needs. And so we thank you for that first and foremost. That's one of the reasons why you're our first housing provider vendor that's starting this kickoff here on the podcast. But so was it always your life dream to take over the family business, or is this something that you kind of got into over time? Tell us a little bit about yourself and sort of like your origin story, if you will.
Sure. Yeah. I mean, it might not be a shocker that I did not grow up, dreaming to be an insurance agent. It's definitely not the sexiest thing in the world growing up, but, I went to high school in Manhattan Beach at Maricosta High School. Actually, both my parents went there too. Then I went to San Francisco State University up north and graduated with a degree in history. I wanted to be a history teacher and, educate kids and do that, but nobody was hiring teachers at that time. And, so I got a job at the agency as a personal lines, assistant account manager, helping, get evidence of insurances out to your lenders, help ensure your payments were made on time and your policies didn't cancel and things like that. Then I started working as an account manager, servicing your policies full time with the book of business. And then I moved on over to the commercial lines department about 2017 and really started to get into the apartment association and things like that. I used to go to the monthly mixers here a couple of years ago, and the Christmas event. There's always a lot of fun with the toy drive and things like that. So yeah, definitely, having a good time with the association and trying to get back into it. But, things have been a little crazy over at the office lately.
Yeah, well, no, and even for us, I think for us, certainly I think people want to get out more. They want to visit more in person. So we're planning a lot of in-person activities and some of those things back into the swing of things. Let me ask you, because, history is an interesting thing. I think having the background with your family business and really it sounds like you've had a different experience in the industry and the profession as you are now. How much of your business is specialized in multifamily property owners and commercial?
The commercial side is about a third of our business, and apartments and residential is by far the biggest sector of that. It's probably at least half, if not more, of our commercial side. So it takes up the vast majority of our time on our department. So, as you know,
there's been many calls, and I think we're going to do a class soon, right, with you to bring for those that want to get more information and have specific questions as it relates to their individual needs. But we have gotten a lot of calls in the last year or so. But really, we've seen a sizable increase in building insurance. Almost, I think on average, what we're finding is about 20% increase. What would you attribute that sort of jarring increase, right? Especially when there are many jurisdictions, rent stabilization, they're not going to be able to absorb those added costs necessarily as easily as they could in the past, especially with such a large increase. What would you attribute that jump, if you will, in the cost for building insurance?
There's several reasons right now. One would be market availability with carriers pulling out, and then you having to go to another carrier that just has a higher rate. That's just a one big reason why you'd didn't see that increase. But if you get a renewal from your own carrier, it could still be that high just because they might have had a rate increase, because several carriers right now have raced over to the DOI to get a rate increase, and the DOI has tried to stop them from leaving the state by approving a number of rate increases.
Right.
There's also replacement cost valuations have been going up on the property side. So the amount of coverage needed to rebuild your apartment building has gone up from year to year. It always goes up, but that annual increase to offset inflation basically has gone up more than it typically has traditionally.
Yeah, it's interesting when you brought up the first one. I mean, really, the big elephant in the room is State Farm, was the canary in the coal mine. And it wasn't without knowledge. Like, they basically said, look, if you're not going to be able to allow us to charge more premiums, we're going to have to, leave the state. And I think, we many people in state government, I hear them talk about California and how we're the largest economy and, have a lot of bragging rights, which is true and correct. But business is business. And I think with the recent fires in Northern California and Southern California, the back of napkin profitability of many of these providers just kind of went out the window. And they were I would say, you had good coverage and it was, affordable, right? I mean, it was arbitrarily affordable, but also because they wanted an aggressive market share, they were a little bit more amenable in that cost. Would you say that that was like a defining moment, or do you think that it's been building up for the last 5 years, and that this is just a compounding effect as a result of a lot of carriers deciding to exit the state altogether?
It's definitely a compounding effect of a number of things. I mean, like you were mentioning before, carriers were in a pretty sweet groove there for a while, offering pretty reasonable renewals, good coverage. And that's because there was competition in the market. I mean, anytime there's a lot of carriers competing for your business, they're going to try to keep the costs as low as they can, like any other business. But as soon as, there are carriers starting to pull out, carriers are looking to recoup things. But also, the fires definitely don't help. When carriers are putting out money on the back end, that definitely doesn't help their bottom line. They become more price sensitive. I mean, right. That's obvious. But also, fire mapping scores have become more robust, limiting options on where you could locate your buildings or where they might offer quotes for.
So Matthew, when somebody comes to you and either they are an existing client or a new client that you'd look at, what are the things that you look for in assessing their insurance needs? And then what are the things that housing providers should be thinking about when they think about insurance? I guess, one of the things that I like to do is what if you were to, as a subject matter expert, give sage advice to this industry that is a difficult industry now. I don't think it used to be, and I talk about this with Juan Huizar and other partners, it used to be you buy it, you hold it, and you're good. There's not much going on. Now you got regulation, you've got all these changes in the marketplace. With the government being involved, it's a partnership that you never used to be there. It's like it's like your cousin that comes over and eats too much at the barbecue. That really kind of changes that dynamic between housing provider and tenants. So when you look at, insurance requirements and insurance needs with this spike, what is it that you do that's able to assist people to get appropriate coverage?
Anyone that would come on over to our agency, the first thing we'd ask for is a copy of your current policy, your actual hard copy of your loss runs. That's a big thing now, that not just, hey, I've had no losses. I actually need to see a generated report of your loss runs from your carrier. But I need to see, and then we're probably going to ask that you fill out an application now too, because there are so many things that are going on that we'll get into that could just be individual pitfalls right now.
Right.
But first I need to assess what you currently have. I want to see where you've been. I want to see, and I'm looking to, figure out what your expectations are basically by looking at your history, your premium history. And so I want to see where you've been, if you've had any loss histories, what kind of coverages that you've had, because I'm trying to keep your coverages apples to apples as best as I can. And so I want to know what your deductible limits are, what your building limit is right now, what your annual, your business income limits are, and things like that. Those are the big ones.
Would you say that's one of the biggest mistakes that people make, is that they're used to having it priced a certain way, and then you come in with maybe with the new world order of coverage and what that costs, and then they'll say, but my friend got it over here and it's materially different. And then, obviously there's a reason why, right? That means that there's less coverage than they had. And that's what you mean by apples to apples, right?
Right. I mean, risks are rated so individually now that, your house, you could have, something built down the block that has, something that's similar size, similar build, but you need to look at how you're being covered. You know, those could be two different policies. I mean, you could have a similar price, but you could have two completely different coverages.
Right. And so would you say that in a way you're a doctor that provides prescription, right, that's tailored to what their insurance needs based on an assessment of all of those different variables that are in the application, that are looking through their policy and what the coverage was like? Is that right?
Absolutely. Yeah. And we're going to give you we're not just going to, hey, here's your quote, here's your price. This is your quote, but here's significant details about this quote. Here's some coverage conditions that you are definitely going to want to take a look at. You know, here's your deductible, here's your building limit, your business income limit. I mean, these things are usually not apples to apples when another agent gives you a quote. I mean, it's very rarely that it's exactly the same.
What are the things that, let's say you have a good policy, you haven't gotten the knocking at the door with the 20% jump, you're sort of still in that, you're hearing about it. What are things that property owners can do to mitigate, if you will, sort of, because I'm hearing they're flying drones over properties, they're showing up and taking pictures and doing like their own sort of site survey, if you will, and making sure that, and then, you know, what they'll do is they'll send the notice with a cancellation, and then they'll give you corrections, say, okay, you need to do this. So like, you know, and these are pretty, you know, sizable things that need to be corrected in order to get that policy. And it's sort of like a stinky letter, because now that you have it, you know, when you go to get coverage, you know, it's part of what you know, where some of your deficiencies might be in the property, right? So what would you say for somebody who isn't yet in the fire, preparing to their property, or what would you say that they should be thinking about before they get, you know, renewal or get the drone flying over and all that sort of stuff we're seeing in today's?
So, I mean, this might seem kind of silly, but I mean, know what your property looks like, not only in person, but on the internet. I mean, look at what your property looks like on Google Maps, search it on, you know, public health websites, just see what comes up there, you know, because that's what carriers are going to be looking at when assessing your property. They're going to say, oh, look, there might be an issue here. You know, what's the issue here? You know, and the burden of proof is on you to show, as the owner, that my property isn't having this issue. And so carriers right now are more willing to say, we're good. I'm not going to offer you something because there's something maybe over here that I don't like. And that's because carriers have more power and more tools at their disposal now than they've ever had. And they're going to make you verify your requirements like they have never had.
Is that, I mean, I hate to ask this. Not every question should devolve into this. But I mean, is AI impacting how now or in the future how people are going to underwrite insurance?
Yeah.
And what are some of the ways that you're seeing or thinking about?
Some carriers will automatically pull certain websites and things like that to just streamline the process for any types of things that they might not like. And it's just data collection for the most part, and it's usually sent to an actual human to assess finally before making that final assessment. I don't believe they can do it fully autonomously.
Sure.
But
they will eventually, right? I mean, we're all headed there.
It's possible, but but the data collection aspect, because they collect so many pieces of data online, that's really what they're doing in terms of the AI aspect. Yeah.
So look, how do you convey that, and I've talked to folks that are in family housing and want to understand and learn the business, if you will, right? And be good at their business, and they're in a growth as opposed to just preservation and hold. And they're in a growth mindset for these properties. When I think about insurance, when you need it, you need it. Right? I mean, you don't want to be underinsured or have like something that was excluded that incident occurs. And then when you want to get it and something's already happened, you want to protect yourself in the future, now is exponentially higher because the event occurred at your property. I guess, it's one of those things like you take the umbrella so that it doesn't rain. And it's hard to convince people to understand that mindset as opposed to being, sort of after the fact dealing with whatever the issue is. How would you impress upon somebody who's in the multifamily housing market and they want to grow, but obviously they want to minimize their costs? How should they think about this? How should they approach this? I mean, this is their asset. This is something they're investing in. They don't want to be caught off guard or have a significant event happen where they have to, liquidate the asset. How best to frame it so that people understand that process a little bit more?
I would think about it more as an investment than more of an expense. This is something that I'm investing in case something goes wrong, not just, hey, this is a bill I need to pay, like a utility or something like that. there is value to this, and it's hard to see that value until you actually need it, because until then it is basically just an expense and someone telling you that I need to do something.
Right.
Basically, it's just another one of those. But I would expect most people that have gone through it are probably happy they've had it.
Right.
And they've had a total loss and things like that. They're like, oh snap, like this was, definitely worth it. Yeah, it might have not been perfect. There might have been some things I wasn't aware of, but I was in the whole millions of dollars, and now I'm not.
And it's funny, you can, I've had friends that have had it both ways, right? One that was, really perfectly covered, and I call it like stress-free. It was like they just had everything kind of taken care of. It was almost like concierge service. Like, what was that, policy, and how was it? And then others that are literally arguing, going to public adjusters, really trying to just fight out what they feel that they're covered, but they missed the mark, right? And there's some subjectivity or an analysis that they thought they had that they really didn't have. And that's where you come in, right?
Yeah, absolutely. I mean, if you have any questions on any, specific question, because the policy is 150 pages long. I don't anticipate anyone's actually reading the full policy.
No.
No. But if you have any questions on a specific, if this happens, and if this, let me know. That's what our job is to, try to play out the scenarios for you as best we can, because we're talking hypotheticals here. So the best we can do is, hey, this is what we expect is going to happen due to this. This is how I read this language, but it's hard to, talk examples when we're talking this hype.
No, I get it. And look, and I think it's the point is everybody's unique to their own situation. That's the same with, quite frankly, leases, right? Like right. I always tell people, like, we have our forms and then you have your property. There's certain things that you're going to want to include and talk through when you work out a lease so that you're fully protected as it relates specifically to your property. So I think the same can be told for your building insurance. So let's talk about liability insurance. I think, I almost think of it as same way that you said, it's an investment, right? It's not something that's on the if you look at your liability in terms of a cost of doing business, it's really an investment in asset protection and really protecting your thing. What have you seen in terms of liability insurance, and what's your thoughts on that?
Other than rates going up, liability is the funky side, the mystery side of of insurance. It's the open-ended side. So people always want to know, how much liability coverage do I need? And the answer really is as much as you can afford.
Right.
But really a good stopping point is how much is the entity that owns this piece of property worth? Because that's probably what they're going to set the amount for that lawsuit if you ever were to get sued and you need to provide coverage for. That's a good stopping line, right there. Minimum is going to be about $1 million per occurrence, $2 million per aggregate. The big thing on the liability side is the habitability liability coverage, which, if anybody doesn't know, liability coverage is if a tenant sues you claiming that your apartment is not habitable.
And we're seeing more of those, right? We're seeing more and more and more of those happening.
It's becoming one of the most common liability claims after a trip and fall or like a dog bite claim and things like that. And carriers are taking notice of this. They're starting to limit this coverage or exclude this coverage from a lot of policies. This is something that I would definitely ask your agent, hey, do I have coverage? If not, if I do, how much do I have? If not, is it possible that I get it? It is very difficult to get right now because it's so easy to sue somebody for right now.
Well, yeah, we've always been in California as highly litigious, but essentially counties, municipalities are paying legal aid and other, nonprofit law firms that are incentivized to pay for tenant protections through these lawsuits. So we're seeing a lot more uptake as a result of that. And, whether or not they're valid or not, we've seen essentially that in most cases, it's something that's arbitrary, capricious. It is not a habitability issue. And I think, we do talk about this in a lot of our classes, is that housing providers really have a hard time understanding that their primary role is protect themselves, right? So, when you have that nuisance tenant or you have that issue there, you have to treat each call, each case on its own merits. You can't think, oh, this guy just keeps calling me, it's another nothing burger. It's like, well, but that time might be something that's material, might be real. And so you have to document that you tried to go out and you tried to deal with that. And certainly that'll help you with the coverage as well.
It all helps regular pest control services, but document it, right? Documenting everything you do is really got to be your, the Bible now.
Yeah, it starts with the very beginnings. It's throughout the entire life cycle of the business. Are there any other insurance policies or other types of insurance that they should be thinking about other than, and I mean, like the big one in California is earthquake, fires, building insurance, liability insurance. What other types of, I've seen these different, policies that are out there for, making sure that you have, rent coverage, and I'm sure there's lots of exclusions and all that sort of stuff. But those are the main three buckets, correct?
Yeah, absolutely. I mean, there's special conditions that you're going to want to pay attention to, though, within those. Primarily your lender requirements. That's going to be a good go-to is what is your bank requiring in terms of coverage? Because you have to have it for your loan.
That's right.
So in terms of your property coverage, they're almost always going to ask for replacement costs. So you're going to need to be able to, you have to get replacement costs on your property coverage. In order to do that, you're going to need to have updates on your building. If you don't have updates on your electrical, heating, plumbing, roof, then that's going to become more difficult to do. And then you're going to be talking to your lender about waiving requirements, and you don't want to be doing that anyway in terms of coverage. But
right.
If your loan requires earthquake or flood or an umbrella, those are pretty rare, but it depends on the location usually. For earthquake and flood, of course, those are not typically covered by your standard BOP policy or your property policies. They're going to usually be a bit more expensive than your, just because they're catastrophic. Those types of policies just tend to be, what we call, insurance carrier killers.
Right.
Unfortunately, because when they come in and they wipe out communities, and that can just be very burdensome. So mostly those carriers tend to break it up between a number of different carriers and their own reinsurance and on the back end. So
right.
They've figured out how to not get taken down by an earthquake or, a catastrophic, issue. Follow your lender requirements, but in terms of liability coverage, more is always better because it's always open-ended. But of course, your budget is your budget.
That's right. I mean, look, I think you have it right there. As you want to have it, you want to cover at least what the value of the asset is at a minimum. All right, let me ask you one last thing here, and then we'll segment out. But I guess when if you could wave a magic wand, right, and you wanted to convince somebody how best to approach this, or what is the number one mistake that housing providers make as it relates to insurance?
They've probably not been documenting their updates and their maintenance for years. So if you haven't been, start now. But I really hope that you have documented clearly with every time you've updated or had some sort of maintenance service. That not keeping a record of that is gonna bite you in the butt going forward.
Right. And one of the things I'm seeing in Long Beach, Los Angeles passed it a couple of years ago, is earthquake retrofitting requirements. Obviously we have members all over Southern California, but we see a lot of housing stock that were built in 1920s, 1930s, and they've had some maintenance. They've done some things, but we're seeing that government now is kind of putting in the groundwork for mandate, right? Unfunded mandate, of course. And nobody believes that somebody should suffer in an earthquake and perish as a result of faulty foundations and whatnot. And so it's for us in our position as an association, it's been okay, over how much time, right? And how do we manage this process, right? As opposed to just ripping the Band-Aid off and nobody can find a civil engineer, nobody can find an architect to do it, and there's a plethora of applications. We're seeing that in Pacific Palisades, right, where people are trying to rebuild and it's like get in line and they have this massive undertaking. So it's not a question of if it's going to happen, it's just when and how it's going to happen. And certainly we want to see, government assistance programs and grants and different things like that. But as we think to the future, right, because, a lot of people, we have to meet them where they are. Some people have maybe 2 properties. Some people are more sophisticated and have a lot more. Some are, they bought a couple and they're just holding on to it. As you think about sort of the future mandate of earthquake retrofitting, what, if anything, and this is a little off question, but I just wanted to kind of pick your brain on it, should they be thinking about as it relates to that? I mean, is there a material reduction in cost if you just went through an earthquake retrofitting and all of those types of things, or is it more of like it's just keeping up with what's expected from you anyway? It's
going to eventually be an eligibility issue, and especially if you have any tuck under parking and things like that, subterranean parking where it's under the ground or it's not covered. Those are going to especially be needed to be retrofitted for seismic activity, or else you may not have options to get.
Right. And I mean, these are pretty significant investments, right? I mean, I'm seeing these steel structures and, I'm looking at the different engineering of it. It's made some pretty material investments in your property you have to make.
Sure. I mean, it's not here yet, but I mean, eventually you may not have an option for earthquake or something like that.
Right. Yeah, that's interesting. Okay. Well, that's a real thing.
Yeah. It might not cost you like, hey, it's going to be like $5,000 more premium. It's just, you might not have.
You just may not be covered, right? Because you haven't kept up with it. Right. Yeah. I think, it's interesting. One of the things we're advocating is like, whatever you do from a government perspective, don't make a list, right? We don't need like a list of people in that category, right? But what we are doing is like, let's start having those conversations, right? Kind of do an assessment. Kind of where are the 1920s properties, where are they in terms of like from a holistic, not an individual perspective, and then how best to manage that, right? So it's sort of like those are, maybe needing the most assistance, and then those that are built in the 80s or, the 70s will have a little bit less work to be done as we sort of manage that process. But that's interesting. Okay, I didn't think about it in that regard. Like you just may not be able to have coverage, period.
Right, and that's typically how it's going to go. And you could have an 80s building, but if you haven't redone that roof, there are carriers that are going to start to not want you because their threshold for updating that roof would be like 30 years. And so that's becoming more and more of a requirement now is they're going to need to see some sort of update within those 30 to 40 years or to get a quote, regardless of the year built.
All right.
Yeah.
So Matthew, real quick, if I wanted to use you, how best to get a hold of you? What is there, when you say that assessment where you actually look at someone's policy and then you can compare apples to apples, is that a free assessment that you would undertake? Oh
yeah, absolutely. I mean, I would just email you out, from my email, but you can submit a request on our website, bisins.com, or you can send me an email, matthewb@bisins.com. I would go ahead and send you what I need to get a quote from you, which is typically, a copy of your policy, loss runs, and a supplemental application, which would be basic information about, how the entity is managed, who owns it, basic property information on the updates and things like that.
Great. Well, you heard it here. If you do not have an insurance agent that's got your back and that won't be proactive, this is the guy for you here. This is John Edmond from the Apartment Association of California, Southern Cities. And I want to thank you, Matt, for all your time and your expertise and advice. And listen, you were the first. So there's always something special here. So we'll definitely get you back on. I think what we'll do is we're going to hold a class, right? And we can talk about some of the best practices that we discussed, but a little bit more in depth here, and we'd come on out and we'll be able to talk about your specific situation. So thank you so much, Matthew, for your time. Thank you all, and this concludes the first episode of the Apartment Association of California, Southern Cities Real Talk. I don't know what we're going to call it yet, but we'll do a naming competition. All right. Thank you so much.